Welcome to Trading Lounge and the Elliott Wave count for the European indices, and starting with the German mid-cap 50 here on the daily chart. So in a nutshell, we're looking for wave 3 here, an A and a B and a C here for wave 4, and from B to C here we're looking for 5 waves down as 1 and 2, and 5 waves in wave 3 here, and then wave 4 and wave 5 to complete it at that point there. The wave 2 was simple, so we should kind of expect wave 4 to be a little bit complicated. So in terms of the wave 4 retracement level to the 38.2% retracement level for the German mid-cap, and in fact most of the European indices has reached its target. Okay, so when we look at the German DAX here, we can see that it's at a 38.2% retracement level. So we can look at this, and we have been looking at this as a bit of an ABC pattern to the upside here. Okay, so I'll just go to the hourly chart to look at that in a bit more detail. So from wave 3 here to wave 4, we have that A, B and 5 waves up for wave C there. I did make a little error in here. Yeah, the thing that sort of bugs me with this particular count is that as a wave 4, it's pulled back to its 38.2% retracement level. But I just want to drag across the S&P 500 here. This is a 1-hour chart on the DAX and a 1-hour chart on the S&P 500 here. So with the S&P 500 here, it does appear that I have, well, first of all, this particular correction started later in around Halloween, and the European indices started 25, 26, somewhere much earlier on these sorts of lows over here. So the European market has been rallying a few days earlier than this market, but because I feel that we've got 5 waves up here for the S&P 500, we'd have to label it wave A, and then we come back down for a wave B, and then up for a wave C to have its wave 4. Okay, so with the European indices, I've got this as a wave 4 here already. So I just think, you know, from wave 4 here down to wave 5 here that we're looking for, I can't see that happening without the S&P here. So I'm thinking that this wave 4 may get a bit more complicated. So we may have to sort of look at this as an A wave up here and a B wave back down into this space here, as an A and a B and a C here, the same as the S&P here, A, B and C here. It looks bigger here because it's more expanded, but yeah, that particular pattern. So I think, so for all the European markets, we can follow this particular pathway to here, right? But then I think we have to be careful for for all of markets, because I figure they're going to be moving up from that point. Okay, so this is definitely 5 waves down here for the S&P, so we're going to see a little ABC back into the 50-60% retracement level, and then 5 waves lower here. Okay, so I think we need to take that into consideration with this market here as well. So yeah, an A wave, a B wave and a C wave here. So I've brought this up here not to particularly short it, but to cover any long positions that you may have open here. So the two things here, unfortunately, is that yes, it can come all the way down here, or we're just going to go an ABC, and then we're going to be looking for another 5 waves a little bit higher. Okay, so this pretty much runs in. I'm going to go to the AEX again, because I said I wouldn't be doing it anymore, but I would like to do it now and again, especially if I like to find markets that have got nice clear counts. So in this case here, it's always had the probably one of the clearest counts. So 1 and 2 here, and then 1 and 2 here, and 3 and 4 and 5 here for the 3rd wave, up for the 4th wave. So it's also pulled back into where it should be as well. But I'm figuring that wave 4 can get a bit more complicated. So yeah, we just need to bear that in mind. Just go to, oops. So yeah, it's also made a little mistake in here as well, but still, we've still got this A, B, and then we've got 5 waves up here, 4 waves C, or 4 here. So I mean, we may even get a triangle out of all of this, you know, coming in through this way here. I just don't know. But they have pulled back to their retracement levels. That's the main thing here. So I just think that you should use the S&P 500 as a bit of a guide stick over the next 2 to 3 sessions, and work with that. So yeah, and this also carries through to the FTSE as well. So with the FTSE here, this is the 4-hour chart. So it's reached its 38.2% retracement level, so I'll just adjust that in there a little bit. So it may not be over either, you know, we may end up with wave 4 sort of over here somewhere in some, we've got 3 waves up here. It could end up in some sort of triangle pattern coming in here as well. I guess one of the important things here though is that we can look, maybe I'll just go to the hourly chart here. So yeah, this distance from this low to here, I always like to, you know, it's put the 50-60%, at least know where that is, you know, and well, obviously it's that good support there as well. So that's what we can expect the market to pull down from that point. Because we've got, I mean, this first move here to the upside appears to be in 3 waves here. And there's some of the markets around the world that have done that. India's done that as well. But yeah, look, the trend, this is a trend and it's moving up, and we don't need to fight that. It's just that Elliott's suggesting that there's a top in play here. But if a new high is made, we can go long from this point here. The 72 number will play out quite strongly here. So if it did move up through here for any reason, we'd probably see it fold back as well. So if it moved up here, just be mindful that it would fold back, because I know that it likes to stick to this particular number 72. So be mindful of that. But otherwise, we'll see a move down as an A and a B and a C into this space here. I guess if this being the 61.8%, if the 7,000 becomes a retested resistance, obviously the market's going to come down, bounce off that, and eventually find its way through there, then that would be the setup to go lower at that point down into wave 5. So yeah, look, that's sort of the pattern. You just have to sort of work out what degree of structure that you're trading. It's not normally time frame that you're trading. It's normally you should look at it as the degree of structure that you're actually trading, and not the, you know, the 5-minute or 2-minute or some tick or whatever. Because normally, you know, when you're trading a 5-minute or 10-minute or so on, you don't know how much volume has been traded really in that 5 minutes as such. So it could be an empty husk basically, or it could be filled with, you know, a lot of trades in there. So that's why tick charts are best to trade with scalping. But the trouble with CFDs on the tick chart, it doesn't tell you how much volume was traded at each tick. Rather, it just tells you that the price had moved within you know, in that space. So but with say a futures contract on a proper tick chart, you could set it at 50 ticks or 40 ticks or whatever you're working with, you know, and you know what's occurred within that space. Okay, moving on from here. So we've got we've been looking at France, so we'll look at France here as well. It's the same thing as well. We've got the rally to the upside here. I do have a count with this wave 5 in place here, but I'm going pretty much across the globe with a wave 4 in play here. So I still need to see how this pans out as well. I mean, obviously, if it moves up higher here, then my count with on the daily chart here with with wave 5 being in play here, is on the cards. But in the meantime, this can just come up to this wave 4 of 1 lesser degree here and then move down. So with this one as well, even though the whole structure is in here for wave 4, we can see this moving back into this space and then having another move up here as a wave 4 and then moving down here for that 5th wave here. So yeah, and then over to Italy, and this count's always a little bit tricky for me. I mean, the country's in a different financial situation than some of the others, but in its own way, it kind of, on an intraday basis, it kind of follows the other markets and the S&P and so forth. So I've counted the S&P 500 to the upside here in 5 waves. That's what I'm thinking is going to occur for this market here, the MIB. This is a 1-hour chart. So I'm thinking that it hasn't pulled down as far as the other markets. We had our target to the upside here, so I can remove this here. If you're long, you probably wouldn't have held over the weekend anyway, but it was just that short little move there. So yeah, all going according to plan. There may even be another high here because I have to look for 5 waves up here. And do I go 1 and 2 here and 3 and 4 and 5, or do I put the wave 4 here and go 1 and 2 and 3 and 4 and 5 and then have this ABC here? I don't know. Or do we come straight down from this space here? I don't know that, but I think just for the sake of all this corrective business that we're going through, is really keep an eye on the S&P 500. It does seem to be the driver, and yeah, so if you're trading the MIB, I'd keep a very close eye on the S&P here, and especially in this move here in terms of getting 5 waves to the downside here. That's what we're looking for. At the end of 5 waves, you can buy, and then we'll see a move to the upside from that point. Because we got 5 here, we'll get 5 over here, and that should be the same for this market. So 5 waves up and back, may not pull all the way back because of the 19,000, may just sit there, and then we'll look for another test of the 20,000 area there. Alrighty, thanks for tuning in, much appreciated. Cheers.